Welcome to the Orlando Money Show. I'm Paul Dykewitz, the editorial director of Eagle Financial Publications. I'm also an author and a columnist with StockInvestor.com. I'm delighted today to have Toni Hansen with me, who will talk about technical trading.
Yeah.
And she is distinctive because she is a technical trader. And she focuses on opportunities that looking at the technical trends would provide. And one of the keys is she likes to focus on momentum. So Toni, talk us a little bit about you're looking at momentum through technical trading techniques.
Okay, right. Well, when I first got into trading, I didn't have a lot of background in technical analysis, so I was very much a self-taught trader. And a lot of the emphasis back then in the mid to late 90s was really looking at things like pullbacks into moving averages. You know, it's like, just buy a pullback into a 20-period moving average. You'll be fine, right? Didn't really work that well in practice. You know, there's a lot of components that go into a strategy that determine if it's going to be successful or not. It's not just purely looking at like a moving average or looking at a pullback. And what is a pullback anyway? That's really vague. So I went and looked at the individual components of different strategies. So you hear people talk about like bull flags and bear flags. And what I'm looking for with regard to what momentum is I'm not using an indicator to give me momentum. I'm using a visual of the chart price action itself. So no matter what security I'm trading, I'll do futures, forex, stocks, doesn't matter. What I'm looking for are those zones of congestion where you get a lot of back and forth action. And you'll see V's and inverse V's. And that's kind of a good general guideline of what average momentum is for that security. When you get a trend that has bars that are overlapping like 3/4 of the percent of the previous bar, or you have a move that is going with, 3 strong bars up, but then you get a correction and another 3 strong bars up. That entire move is generally considered a pretty average momentum. So where this comes into play is that can help determine when a trend is coming to an end. So if you see the momentum beginning to shift and you see a lot more overlap coming in, not just on a smaller time frame, but also looking at another time frame. So maybe you see a shift on a 5-minute chart. If you go up to the 30-minute chart and you could also see that shift in momentum, then that can be the development of what can lead to a really strong reversal trade. So I look for those changes in momentum on multiple time frames to help guide my entry on
Now,
strategies.
you must narrow down with sectors or certain markets, small caps. How do you use that in terms of picking actual stocks or funds?
That's a good question. So, like I mentioned, I trade a lot of different markets. So obviously that means how do I know? There's so many things out there to choose from, right? Well, my basis is to focus upon the futures markets as like my core guide. And when I'm coming into strong technical support or resistance levels, simple concepts, things like measured impulse moves, things like that. I also will use Fibonacci to a little bit of an extent. With time, you don't really need to add that onto your chart, but I'll use that as a bit of a guide too. And as the overall market is approaching these key levels, it tells me that this could be a good time, for example, to start to initiate new swing trades in individual stocks. So I'll
Now, when you say
for,
swing trades, what do you mean for our lay listeners?
Usually I'm looking to hold for a couple of weeks at a time. Technically, if you refer to swing trading, you're holding a couple of days up to a couple of weeks. But like in the overall market last fall, when we approached the highs there, I started to look for reversal strategies because we were starting to see momentum beginning to shift, and we were seeing measured impulse moves and a lot of other technicals coming together. And so when you drill it down to a smaller time frame, it says, hey, we're about to enter a larger corrective phase of the market. I think a lot of traders get stuck on focusing on smaller time frames only, so they miss out on a lot of what's happening on the bigger picture. But when I'm doing a larger market analysis, I'm going back and looking at like inflation adjusted charts of the indices, and it gives me an idea of where things are in the larger scheme of things. So I know, hey, is this a good market that I need to be looking for a lot of individual investments, longer term strategies, or is this like this past fall, is this a period of where I need to be protecting gains on a lot of those larger, longer term holds and going down into smaller time frames.
Good.
So even like with this past week, we've had a really good bounce off of from the 2016 lows to the 2018 highs. We pulled back exactly 50% in the market. So we had really great bounce coming off of the Christmas Eve flush out. And right now we're at that midway point though. So with the strong upside move, we're now at a level in the market that it's going to be more back and forth type of trading. So that changes my perspective, and I go down and I focus on smaller time frames.
Great, well that's good for this segment. The next segment will focus on specific opportunities that you can invest in going forward in 2019 and beyond.